Hello traders and welcome back to my YouTube channel IPDATrader. Now in today's video we are going to be doing a little bit of a review of every single concept and idea that I've spoken about in this channel thus far. This is going to function like a little bit of a review. It's going to require you to have some knowledge of the information and concepts that I've already shared with you guys on my channel. And I think it's going to be a great exercise. I think this is going to function like a really good video if you're really trying to see how I view the markets, the way that I map them out, how I set up potential trade ideas, and how I wait for things to happen. So I thought about opening a chart and actually going through the entire process, applying all the concepts that I know, and actually going with that. So you're going to see my entire process that I follow pretty much every Sunday in marking potential markets and actually preparing for executions. So if you're someone that's struggling with actually breaking down the different time frames, how we can potentially use them, what I use them for in terms of understanding, okay, this particular time frame, we're going to be looking at the liquidity story, the structured delivery, the POI selection, things of that nature, then this video is for you because you're going to learn a whole lot. You're going to see my process from start to finish. We're going to be choosing a random pair and we're going to be going through the exact process. This video is probably not going to be too long, but it's going to provide you with a lot of great insight in terms of understanding, once again, how to be mapping out your charts effectively. So with all that being said, guys, if this sounds like something you want to learn today, make sure you stick to the entire video because once again, I'm going to be trying my best to provide you with a clear roadmap in mapping your market. So with all that being said, guys, let's get started with today's lesson. So traders, before we get into the actual lesson of today, just a very quick word from our sponsor today, IPDATrader. IPDATrader is a regulated broker which has been in the industry for over 14 years, which gives you a lot of confidence when it comes to executing trades, depositing money, withdrawing funds, trading funds, as they're a very well known and very respected and established broker in the industry. They allow you to trade pretty much anything you want, including forex, indices, commodities, stocks, cryptocurrencies, and they have something that not many brokers have, which is a zero commissions account for forex pairs on ECN plus accounts. So if you're interested with them, guys, you will find the link in the description below. Use the link in my description to sign up with them, as if you do, you will be eligible for a 100% matching deposit using it, which is very good and not many other brokers will do. So once again, massive thank you to IPDATrader for sponsoring this video, and now into today's lesson. Enjoy the video. So traders, here we are on the charts, and as we said, we're very simply going to be opening a random pair and establishing our analysis from start to finish. So without any further ado, let's actually get started over there. As you can see, we're going to go to forex. I'm going to scroll up and down and I'm going to choose a random pair. Okay, if not prepare anything, whatever shows up is whatever market we're going to be doing analysis for, because as I said, everything that I teach applies to everything that is tradable. So let's actually get started. Let's scroll up and down and let's look for something. Okay, so CHF JPY, not something that I actively trade. Nonetheless, we're gonna get started. Okay, so before diving deep into the market mapping, I want to make some things very clear. Okay, the tools that we're going to be using to mapping in order to map the market is going to be, first of all, higher time frame narrative. We're going to be using structure. We're going to be using liquidity. We're going to be using POI, timing as well, in terms of understanding when particular POI should be mitigated. we're going to be using ATR as a confluence tool, looking at the average true range, spoken about about that in a video. We're going to be using key levels, we're going to be using fair value gaps, and that's it. That's really all that I use for my trading. I do not cover anything else, and that's exactly what we're going to be going through right now in this CHF example. I'm going to leave it on the top right corner. It should serve you as a guideline. Um, Once again, I go very in depth on some of these concepts, such as POIs, the different types, things of that nature. But we're going to be trying to keep it simple because that's what I focus on. I don't like having too many things on my chart, and that's exactly what we're going to be doing. So let's go to a weekly time frame. Now, looking at a weekly time frame over here, we can see that actually monthly, we can see that the data begins 04, so 2004. We can see that we're obviously very, very bullish, trading above previous structural highs, mitigating them right over there, pushing further up. We can see that that's sort of what's been happening this year, okay? This year so far with CHF Swiss franc, we've mitigated the previous structural block that we've broken and traded above, and we've pushed further up. Great. Once again, I do not focus very much on a monthly, weekly, or daily time frame because I trade the intraday price action. So I'm just looking for things that are important in terms of sticking out and actually meaning something for me. So looking to the left, we see that there is no information. So that's quite a big of a disadvantage because you obviously want to be looking left to identify potential areas of interest. Now, we don't have this, and this will happen in specific markets, which is fine. You can still trade them. You just have to approach them from a different angle. So looking at this over here, the very first thing that I see, and that's relevant to me, is the fact that we've once again tapped this IFC structure right over there, filled the imbalance that was present with this big bearish candle, mitigated the IFC, pushed further up, approaching potential rejection area, which more than likely we're going to find a block over there, which we could hit and potentially drop. Okay, so that's just based on the weekly. I'm not going to do any drawings. I don't need it. This is just a little bit of the weekly perspective. As we zoom in and we start getting more information, things will become a lot easier. Okay, so moving into the daily, rather simple. Once again, this is the leg that I would be choosing to work with on a daily from the swing low up till the swing high. We can see that we've traded into discount below the 50. We've tapped this region over here to the left, which is once again your breaker block sits in right there. Tap the area, moved further up, engineer liquidity on the bottom side, engineer liquidity on the top side, grabbing liquidity on the upside, trading into a potential rejection, which is once again your POI for a potential short opportunity. Okay, that's based on the daily, and the narrative on the daily states we've cleared highs with this aggressive move up. Right over there, we've tapped into a big figure, which is also relevant, 151,450. We've cleared imbalance, we've built liquidity, we've cleared liquidity on the upside, we're breaking out. Great. Let's move on to the 4-hour where I do the majority of my analysis, okay? So the higher time frame narrative, we've already spoken about this, okay? With the fact that we've tapped the breaker, we've engineered liquidity on the bottom, we're looking to trade into a potential POI. Now, looking at this with a little bit more detail, as far as I can see, we've traded below a very obvious internal structure, right over there. That's a significant break for me to the downside, especially it becomes more and more relevant now that I see that this breakdown happened, if you look closely, right before we cleared liquidity on the top side. So we know that stops have been captured above this region, longs have been initiated above this high over here, and there could be trapped volume. Now going back over here, forgot to add the idea of trapped volume and liquidity swings, okay, of major importance again. Looking at this market, it's probably not the best example, but it is what popped up, so that's what we're gonna stick to. Okay, so looking at the 4-hour, I would consider this fib as a potential leg. Okay, this fib from high to low, we can see we've tapped discount. We may be very well on our way to the 79. We could be look for potential entries. Now mapping out liquidity, very obvious trendline liquidity waiting to be captured over there. Adding the potential Asian ranges, nothing interesting over there. As we zoom closer and closer, we'll get more information. So let's zoom into the 2-hour. The same fib still stands for me from high to low. And this is actually very, very interesting because we had a swing high over here. Right over there, we've got a swing high. We're actually going to label this. And once again, this is going to take some time, but this is essential for you to actually map out all these things in order to really understand what's really going on in the markets. So we have a obvious swing high that we've cleared, and you want to make sure this is accurate, okay? So I'm looking top left, and I'm seeing that the high comes in on 148.572. 148.572. 148.572. There we go. Now that's accurate. And if we drag this across, we can see that we've cleared the swing, initiating longs above it. We squeeze them for a little with the big bearish candle, and we continue pushing further up. Now, my attention is really dragged to the fact that we have this huge imbalance from this area up until this area. This is all imbalance that we can see, and if I color this, you're probably going to see it much better. We've got a huge imbalance that we're looking to fill and that I'm looking to potentially short. Okay, looking at the wick low of this bullish candle is a potential level of interest to me. 149.932 is an area where I will most probably be looking to short from, just based on the fact that once again we've cleared highs over here with this aggressive wick. We've broken a below structure. We've engineered liquidity on the bottom. We've cleared swing high on the top. We are moving into discount. We're moving into a POI. This should be a high probability selling area to clear some liquidity on the downside, right? Now, obviously, you still want to be able to play both sides. So I'm going to mark this high over here, which comes in at 145.618. Right over there, 145.618. Actually, let me make sure this is correct. The high is actually 140. Let's see over here. Sorry, I'm gonna zoom in. Sometimes you have to really go through this. The high is coming in at 151.494. Okay, so let's do this properly. 494. 494. That's the high that we have in the market, 151.494. And what I'm actually going to do is label this as buy side liquidity, because this is still buy side liquidity. If we're going to push up and move further up, this is where we're looking to target, okay? If you're looking for longs, because this is the liquidity swing, you can apply the same idea for the sell side liquidity resting below this swing on the 2-hour time frame, right? So this low is coming in at 143.533. Okay, so there we go. That's correct. And this is sell side liquidity waiting to be captured. Now we have our ranges, we have our narrative, we have a story. We can start with the process of framing POIs, okay? This is rather difficult. You will have to flick through multiple of these time frames, but the first thing that once again is relevant to me is this region over here of price. This is the wick low, the red line, 149.932, and this is where I will be monitoring price for a potential short opportunity. Okay, this is where I would look to short from, right over there. Now, I'm not gonna ignore the fact that as I zoom into lower time frames, more levels appear, right? Very, very straightforward. I can refine this area. I can use this origin block as a potential POI as well. And as a matter of fact, I'm gonna use that right over there Whoops, didn't mean to move that. And this is also going to be a potential selling area for me, just based on, once again, the clearing of the high, the internal structure break, and the liquidity building below price. So let's drag that across. Let's put this on top. And now we know that this is a potential area of interest. Let's go through the process of mapping out key levels now. So key levels for me, if I zoom into the 15-minute, I'll probably get one right there, which is once again the low of the bullish candle. Okay, you could use this one. I'm going to stick to this one right over there, the IFC structure, which comes in at the lowest sitting at 150,986. So let's do this properly. And I know that that is a potential selling area for me. Now, I'm not going to discount the fact that there is a probability that price may very well push further up, clear the buy side liquidity resting above this high, and then look for the drop. Okay, because we could still target buy side and then drop. But I'm also open to the idea of respecting the origin and dropping lower. Okay, I'm essentially open to both scenarios in terms of sells. And please take the time to review this video if needed. I'm going through my exact process, which is profitable, and you should be able to understand why certain things are making sense right now. Once again, I'm open to the fact that price could very well trade above the buy side liquidity and still drop. Okay, I'm also acknowledging the idea that price could trade into this lower time frame breaker with the focus on 149.932 as a potential pullback area to go short, right? At the same time, I'm also interested in the origin block to look for a short opportunity, even if we don't clear the swing low, okay? I'm not sure what that is showing up. Probably not relevant. So let's move that to the left. We're now zooming into the lower time frame because I'm looking for one more key level, which is sitting right at the wick low over here. That's probably going to be at 151.203 is the low of that candle. So we're gonna adjust this, and now we're completed our selling ideas and our sell POIs. Now I know that all I have to do in this market is either wait for this region to look for a short, wait for the origin to look for a short, wait for the buy side to be captured to look for a short. That's what I want to do in terms of looking for shorts. Now, when we talk about taking buys, which could very well occur, if you remember my last video, we can very obviously see that we have a consolidation that took place over there. We've now broken above it. So what I'm going to do now is zoom into the lower time frame and look for the last block pre-break, because I know that price is likely to be magnetized to that area. So let's delete the drawings, let's zoom into the lower time frame, and let's go through that exact same process. If we go over here, we can very easily deduct that this is the consolidation high, this is the last pause, and this is the block that I'm going to be interested in for a potential long opportunity right over there. We're going to label that as our demand zone right over there. And that's something that I would be monitoring for a potential long. Once again, doesn't mean that I will take the long blindly. I will not do that, but I will be willing to monitor what happens in and about this price. Okay, I also very obviously see the imbalance that price may fill into my area, which gives me more confidence in looking at that specific area, because I know now that price is going to be efficient moving into my block. And other than that, really, the intraday time frame is very, very bullish, combined with the higher time frame being very bullish. I don't see anything wrong with looking for buys. You can see we have multiple structural breaks happening within the overall leg that's coming bearish down over here. So once again, you could take another fib from low to high right over there and look for a discounted area such as this FU candle, which obviously sticks out as a very good buying opportunity, sitting below multiple Asian lows, having captured a previous Asian low, with Asian low sitting over here as a potential target as we go short, but you're still expecting some sort of a reaction or bounce to come from that area. I do not think I need to go through the exact same process of determining the key levels. You're just looking for naked candles, such as, once again, this particular price point over here, which is the wick high, sitting at if I show you this, sitting at 146.365. Okay, that would be another area of interest to me. 365, 146. So I would stick to the FU, and now if completed my market mapping, you can see that we went from having absolutely nothing to covering all of the concepts. Higher time frame narrative, we spoke about it. Structure, we spoke about it with the break that we're looking at. Liquidity, obviously very visible over here. POIs, we've spoken about them extensively. What else did we speak about? Speak about timing. Once again, timing, you're looking for volume into your POIs. Okay, that's all that I would say about timing, because I covered these specific times in a little bit more depth in my mentorship. So if you're interested in that, then you can go ahead and join the mentorship with the link in the description below, but I will not go into much more detail over here. ATR is sitting here. You're looking for extended ATR into your areas, whether that be for longs or short. You're looking for price to be extended above or below ATR, or right at ATR into your block. You will see that that means that that particular price point is going to have a much higher probability of actually holding and providing you great trades. So that's ATR. Key levels, we've covered that as well. You can see them on my screen. This is what I would look for as potential key levels in this market. Lastly, for value gaps imbalances, we've spoken about the idea of price filling the huge imbalance that's sitting right there into the area. Trap volume and liquidity swings, since we don't have any information to the left, we cannot really cover that into too much detail, but we accepted the fact that buy side liquidity is resting above the high, so we could still see that volume being trapped above it and then dropping lower. At the same time, we know sell side is sitting here, obviously here, here, and any major swing low that you're looking at as a potential draw on liquidity. So with all that being said, I hope that this video provided you with great insight. This is the same process that I follow for each and every single market that I trade. These are the concepts that I look for, the narratives that I follow, the ideas that I trade, essentially. Okay, so I hope that this video provided you with great information. I hope you really enjoyed it. And yeah, if you actually found some value within the video, please drop a comment, drop a like, help me with the YouTube algorithm as much as I help you with the algorithms in the market. And take care, everybody, and I will talk to you guys very, very soon. Thank you very much for listening.